driving it is basic economics. And I think if you look at the demand patterns around the world, the largest, there's certainly luxury demand and upper upscale demand and mid-scale and economy. There's all sorts of segments of demand. But if you really sort of drew the pie chart, looked at what the biggest slice of that pie chart is, it's really more, sort of mid-scale plus or minus. And I think what you're seeing around the world is, in terms of what's happening from a development point of view, is reflective of that. The other side of the economic equation is, the cost side of the equation. And I think, because you got to drive revenues, you got costs to drive your bottom line. Investors are making, sizable investments to drive returns. When you look at what's going on, not everywhere around the world, okay, but in many of the major population centers around the world, certainly the U.S., certainly Europe, which are the two largest lodging markets in the world, but increasingly even a market like China, labor costs are getting higher. So you sort of both, heaviest demand and growth in demand, given what's going on with the growing middle class there, increase in cost structure, particularly related to labor, I think really focuses the economic model, not exclusively, but increasingly on limited service development. I said it in the panel, we're seeing that everywhere. That's a phenomenon. Look at what's going on in the US. It's pretty much all the growth in the US. Look at what's going on in Europe. If you look at any new growth in Europe, new units, pretty much the case. I would say in the last 2 years, we've seen it starting to shift a bit in the Middle East, Latin America, outside of some very large urban markets. It has been and will continue to be the story in Asia Pacific, particularly China, but increasingly India and even Southeast Asia. Again, not exclusively, but I'd say sort of increasingly more about limited service. That's why, a year ago, we did a deal in China with Plateno, who did 7 days, with an exclusive license right with Hampton, which is, our way of saying, we worked for a couple of years in the build-up to that, our way of saying, that really ultimately to win in that kind of market, for us, we think it's going to be a lot about Hampton and a lot about Garden Inn. Now, we will also have Hilton and DoubleTree and Waldorf and Conrad and Embassy and other brands, but in terms of bulk, much like we have in the West, that's going to provide sort of the, the network effect, if you will, in that part of the world as well.
Interesting. So the one thing to add is, you may know that for Accor, the limited service segment is half of Accor network. It is the fastest growing segment all over the world for Accor, and it is half of Accor pipeline development, which is today 600 hotels. And it is best suited. One additional reason, and I agree with what Chris has said, is let's be very focused on limited service. It is an 80% B2B driven segment in many local economies, which is it's fulfilling a service on behalf of local expansion, GDP growth, emerging middle class population, small, medium-sized enterprises, great return on investment for the owners. So it's good as an investor, it is good as an operator, it's good as a franchisor, has lesser volatility and growth prospect in many countries, and we operate in 60 countries already.
I just add, I think it's the return as well, to Sebastian and Chris's point. When investors, and we announced this morning an investor that's putting $250 million into the construction of any of our 16 brands, when that investor looked at the return on that investment, they looked at the select serve and decided to put it in new construction into our Wyndham by Wyndham because of that return.